Today is October 27th. Right now it's around 4:05. So we have the Apple and the Amazon earnings out, and the stocks, both of the Apple stock is okay, but Amazon stock is getting hammered, just like Facebook got hammered yesterday. And it comes down to the guidance. The Facebook was hammered yesterday because the street does not like the fact that Zuckerberg has been very stubborn, and he even mentioned yesterday that they're going to continue to even spend more next year, more than this year, double downing on the metaverse, while street has been calling him out that do not spend more on the metaverse, do it on the sideline, whatever you do on the background, but not that, the 10 billion, $30 billion you're spending every year. So, but he didn't listen. He just just basically said F off, and then the stock is getting hammered because of that. So that's the story of the metaverse and the Facebook. I mean, if the Facebook, the revenue was up, and they're spending a lot of capex on these data centers apparently to improve the AI hardware. So the Netflix and the Nvidia and the AMD stocks are up because of that, the Marvels and others. But instead of the Facebook stock, the Meta stock is, they are basically not going to be rewarded until we do see that the growth has come back in revenue, because next year the projection is, the Q4 projection is 32. If it goes significantly above that, maybe stock will return around 120, best case. But the stock probably is stuck here, and it's probably going back to 78 if the market is not favorable in the near term for sure. And maybe we'll go back to 140. That was basically the resistance that it has found. It will find once it breaks it. But that's a long story. It's long away, far away from now. Let's put it that way. On the Amazon side, I'm yet to go and listen to the conference call, but it looks like that the guidance was poor, and they did miss the EPS and revenue both this time, and the stock is down 20%.
California 85 South toward Gilroy.
Was down 20% at some point, but now it's around 15% up. So I think the stock will probably be bought back tomorrow, and it will be again around the same level as Facebook. So the Facebook and the Amazon stock both will be around 100, and I think there will be opportunity for the retail investors to dig in, because Amazon is compared to Facebook, which is not growing, which is growing at a very slow pace, like less than 10%. And all the growth is having is going to be consumed. The cash flow is sort of like just below 1 billion because of all the money being redirected to the metaverse reality lab. But Amazon story is different. Amazon is cutting cost, but the growth is still significant on the AWS, over 30%, but it has slowed down, and Amazon, the retail business, is really getting hurt. So the growth is there. As soon as the Fed pauses, I think Amazon stock will be back in action. But Facebook is going to be an idiosyncratic story. So until Meta, Zuckerberg does something, like admits his fault, or he just or it does do an about turn, say that we're going to cut spending. I think that's coming. A lot of people are saying, I mentioned that in my last video, that he's not going to do any good for his employee base if he keeps pushing out the Wall Street, because the employees are there because of the stock. There are multiple other opportunities out there for the folks who are, who wants to do meaningful work in the SoC space, in the chip space, in the software space, in the AI space. Apart from Facebook, they're there not because there's free food, but because of the opportunity that they have with the stock. And if they leave, then Zuckerberg will be left with nothing, right? The execs already left, and it's a matter of time the employees sort of fleet. So So this is exactly is going to happen. I think at some point, I mean, a lot of people are betting that is going to be the pivot point for the stock, and that's coming soon. So $100, I don't think it's a bottom. I think it's going down to 91st and then to 78 with the market by Q1, and then maybe there is an about turn. But my money is stuck there. I did close my shorts. I had like a 50% short and long on Meta, but somehow I closed my shorts before the earning. I did still have some sold calls, so I did make some profit out of it, but nobody anticipated that it's going to go down that fast this soon. So there is no time to react, and I guess there is this 105 point that I mentioned in the previous video, that it will go to 105 level, but it just didn't react. Sometime it happens. On the Amazon story, I think there is a possibility that it will bounce back in the next few months, but we'll see what happens. Now there is this notion that there is a rotation from the tech stock, because the tech stocks are not resilient. We are seeing that earning miss by Google, by all the FANG stocks, right? Worse by Facebook, and even Google actually missed quite a bit. So it becomes very apparent that while we have the McDonald's and the Caterpillars and the Marks of the world are making money at this point, but others are not. So you have to keep in mind that we are in the late phase of this cycle. So what happens is a recession is coming, but the unemployment rate is 3.5%, so people still have job, people still have money. Unemployment rate is not going down. So there are two theories. One is, in this recession, we're not going to see the low wage jobs will disappear, right? So they're going to be still there. People are not going to let go of the people of the COVID workers, but the high paying jobs, the likes of the Facebook and the Adobes and others, they will go away. So what will happen then? So we will have the scenario where there are users for their customers for McDonald's and like the Chipotle's and stuff. Not so much maybe Chipotle, because that's the high end customer, or mid end customers. But definitely there will be Walmarts and the McDonald's will thrive. Whereas because of this inflation, everything is high price, so revenue is up. Earning will be down or just beating probably, because the material cost has gone down, but the price of the service and goods have not. So then this quarter the companies actually did make some profits, and also there is a revenue bids for many of these non-software companies. For the wage, there is no wage decline, and there is not enough layoff to offset the cost for the technology and the software companies. So they did not see the same benefit as some of the other Dow companies did, the industrials did. So that's why we're seeing this divergence of this tech earning and the rest of the the industrials or the retail or the discretionary earning, and also the revenue. So I think Lulu will be fantastic this year. For example, their material costs will be low, but the high end customers are still paying for their goods. So I think my bet would be on the Lulu. My bet would be on something like Nike, but Nike has a different story of China compared to Lulu. So China is down, so Nike will be down. So, but there are opportunities everywhere. Now the question is, next year what will happen? I mean, one theory is that if in the Q1 or the Q2 the recession is going to be here, because there will be pressure of on the consumer and on the inflation, as well as for the high interest rate, and companies are going to, like everybody, will not have 2 job offers, right? So eventually what that means, that will mean that we are going to see the this divergence to be converging. That means that the other companies will also show that earning regression, the revenue regression, just in Q1 and Q2, while tech earnings will be resilient because by the time takes the layoffs and the cost cutting and the kind of productivity regain, I would say, that will get restored. So I'd not say that the earnings will be super good, but I think the revenue decline will be there, but the the OPEX and the CAPEX cut would be little, will cause a little bit of relief in the earnings. So earnings will be not as bad as this quarter, or in proportional to the revenue, I guess, one way to put it. So I think the tech stocks which got hammered this quarter will sort of come back, maybe with exception of Apple, because Apple will get hurt next quarter, but others I think have bottomed. So the Meta may not have stock wise bottom, but sentiment wise has bottomed or will bottom in next few days. Whereas Amazon and others, with the AWS and the Microsoft, with the AWS growth and the Azure growth, Google will also see benefits from the Google Cloud growth. So altogether, I think those are not going away, right? There will be some capex cut for sure from the different companies, but the growth is not going to be like 40%, but it's going to be, I guess, above 25%. And that's still good enough, right? From the Microsoft, and when everybody else is showing like negative growth or zero growth, if you see Azure is growing 25%, if you see Amazon Cloud is growing 25%, although your revenue is not good for this quarter, your earning is not good, but the guidance will basically, I think, will flatten, or it probably might actually even get better for the rest of the 2023. So Q1 will be a good time to buy. If not, maybe around sometime after Q1, before the Q2, when the recession will get priced in. Everybody will talk about not only pause but also cut in the Fed interest rate. So, and inflation data will show CPI and PPI around 4%. So that altogether, I think, will help the tech stock. So the notion that everything is going away from tech in a rotation, I think that's true in the short term, and it's true because the 10-year and 2-year are down, because everybody kind of assuming that we have picked on the interest rate. Fed is not going to hike above 4.75, but that's why the stock is, the bond yields are down, so we have the stock is up. So so the rest of the stock is up, but tech stock will pick up, the software companies will pick up, the ARC innovation will pick up after this phase is over. Once we come back to the growth, when 10-year back to like a 10 point, right now is below 4%. Remember that in the last one of the calls I mentioned that we will see 10-year go down because of the because of the recession fear, and 10-year will go back to 3.5. As soon as it goes towards 3.5 and the spread with the 2-year increases above 70 basis point, everybody will cry recession. And I think eventually what will happen, it will basically we will see the pause for the Fed, right? And I think all in all, it seems that the rotation to the tech stock will come back at some point, because where else will go? There is another theory, or I think I truly believe that the tech return will not come back as good as in the last 10 years. So that means the overall Dow and overall S&P return will be much less, like 5%, 6% maybe. And mostly people will make money using the trading. But that's a different story. We'll have a separate video someday that how the decline of the US is here and what we are seeing in the next 10 years to how things will go.